Alright guys, what's going on? This is Ryan, aka Cantor and Clark, and it is 6:18 p.m. New York time on Monday, April 13th. So markets open back up today. It was a holiday weekend for those of you that celebrate Easter. Hopefully your Easter went well. Obviously celebrating it under different circumstances than you're probably used to, but it's a weird time right now, right? Even the weekend, I want to say hopefully you had a great weekend, but even the weekends don't really feel like weekends anymore. Okay, they don't feel like destinations that are worth celebrating. It all just feels like one long day, just another day that ends in Y. So I'm going to try to keep this video brief. We're just going to go over more recent localized price action. Okay, we're going to announce a winner from a few videos back, so we have a little bit of catching up to do, but we will catch up and make sure we announce a winner for every video. So about 3 videos ago, and remember, all you have to do is be a subscriber and leave a comment, and you'll be automatically entered in. So for this video, if you subscribe to our content, subscribe to our channel, and leave a comment, you'll automatically be entered in to win $100 in Bitcoin. All right, not a contest, just a lottery. So we hope that you have something good to say. We hope that you have something of substance, but you could pretty much just get away with using a period, right? All I do is I take that video URL, all right, and I enter it into this, and it will pick out a random winner. So we'll announce the winner. All right, we're going to talk about 2 setups that we shared in our last video update, and this is something that only BlockRoots members are privy to, and I mean BlockRoots members by members of the BlockRoots platform. So if you're not familiar with the BlockRoots platform, check it out, BlockRoots.com. Okay, for $49 a month, you get a ridiculous amount of material and information. You have your dashboard, which is pretty basic stuff, right? There's nothing special about this. We have price information, market information. You click on it, you get all that stuff that you could find on, CoinMarketCap, right? But the density or the bulk of it really lies within the roadmaps. Okay, the value is in here. All right, there's over 150 videos. This is broken down categorically from very basic stuff to more advanced stuff. We'll go to trading strategies. We have if you look at order flow and market profile series, we have 17 videos in here alone, and there's more order flow videos that are broken up specifically for specific setups and so forth. It's a phenomenal platform for the money that it costs per month, and then the considerable discount we offer it per year. You really can't beat it in terms of value. Then we have basic stuff, our current watch list, all right, that we're looking at, Marketpedia, if there's anything that you're not familiar with, any terms we use, our community page, which I'll get into, curated news. This referrals is great because if you refer enough people, you're essentially a free member. But the community is another thing that we're really proud of. You access this community. It's not a Discord. It's not a Telegram. All right. There are a ton of members that interact with each other. Okay, this is where we share our daily. They're not daily updates. It's every other day we do a market update. Okay, you can see we share setups here. There's a ton of interaction. There's a big chat where everyone interacts. Okay, this is where you'll have most of your back and forth with Josh and I as well. Okay, but we have some phenomenal members in here that you are definitely familiar with that are larger accounts on crypto Twitter, and you just wouldn't know it because they are operating under pseudonyms, just like when they're on crypto Twitter. So we think it's a phenomenal platform for the value, and check it out. And the setups that we're going to be talking about that we shared were shared on BlockRoots. Okay, they were shared on the most recent daily update. Okay, so before we get into anything, hopefully all of you watched the derivatives live stream that we did. Okay, if you're not a member of Phemex, okay, check it out, Phemex.trade. All right, we've talked about this platform for a long time now. It is the fastest platform. It has a ton of stuff coming down the pipe that I cannot even talk about yet. But this is going to be the market leader, in my opinion. Okay, if you look at it just recently on CoinMarketCap, okay, it's above FTX, it's above Deribit, it's above Kraken in terms of derivatives volume. They offer gold. They're going to be offering other traditional assets as well. I can't get into some of the finer details, but it's a phenomenal platform. And you could trade Link, you could trade Tezos, you could trade ETH, you could trade Bitcoin. It has a USD wallet, it has sub wallets. No more getting into synthetic USD. You trade Link, you get right into USD. It's phenomenal. Okay, so check out Phemex.trade. Okay, they have a ton of stuff coming out. You'll see. If you don't believe me, just sit on the sidelines and feel free to observe while everyone else joins the best derivatives platform. All right, so we're going to talk about a setup that we shared, all right, in our more recent BlockRoots video updates. Okay, the two setups that we shared. All right, now there was a lot of back and forth recently up until the 10th. Okay, if Bitcoin was going to treat this area as a potential support. Okay, you're looking to build a base, move further up, or if the loss of this structure was meaningful enough to infer that the rest of this move was going to be down. Okay, so what we're talking about is for majority of this move up, price didn't really build a significant base. If we're just going to look at this I'm going to put this on a Coinbase chart so I could show you the levels that we had marked out for the longest time now. Okay, I was looking at weekly swing points. So what I'm looking at is the major areas in market structure, and you guys remember this from last video if you watched it. Okay, so what I was looking at was whether or not we were able to build a base above the previous weekly swing point. Okay, the idea being that when we regained acceptance into the prior range, into the prior swing low, I would be looking for us to build some type of platform within that area. Okay, me considering that my line in the sand, where I was going to define my risk locally for any type of swing trade and longer duration trade that I would take. Okay, so in this case, no real base. All right, what we are talking about occurring actually occurred very shortly after we shared this video. Okay, so I shared this on Twitter as well, and what you're looking at is you have a heavy high volume dump. Okay, high volume dump into a key area in market structure. All right, so I'll go back to my chart. High volume dump into a key area of market structure, this being the composite value area high that I had established from this previous range. So this previous range, you had basically 4 days back to back. They were inside days from a value area standpoint, very balanced distribution over time, and you pretty much identify where your fair value is, your value area high, okay, where the extreme to the upside of that is, and then to the downside. So for this 4 session range, I identified that and basically just establishing that area over time and trying to identify not just a static area of market structure based on some swing point, daily, weekly, and so forth, but based on where there's a meaningful level of interaction. All right, so where buyers and sellers are most interested from a time standpoint and a volume standpoint. Okay, so where did they do business previously? Because we know when the price comes back to that level, we'll likely see further business take place. Okay, so it's not necessarily, a lot of people get hung up on precision, pinpoint, laser-like levels, right? And a lot of the time you will have a time when a candle will bounce precisely to the dollar off your level. Okay, it doesn't mean anything to me. It just, what I'm looking at is a generalized area. Whether or not they line up perfectly, that's fine. I'm looking to this next area to see the next battle take place. All right, then I want to see, who's in control at that area. The market is trying to move down, but is it doing a good job of getting there? All right, so in this case, you have a major dump. All right, and what I like to see after a major dump, if my thesis is that the market is going to mark down significantly, is I like to see considerable follow through in a short period of time. All right, the first thing that happens is you have a major dump. You have a second major dump that follows. All right, shortly thereafter. Okay, this is about 6 hours right at this point. All right, you have a dump after that, or this is actually 12 hours. Okay, and then the market, it starts to balance out. All right, so it starts to balance out. You basically have a 2-day period, this beginning from here to here. And what I'll do is I will open the tool up rather than go to my TPO chart to show you the session volume. All right, so you'll see the sessions now, and it'll show you what day is what. So what you have is the market dumps, establishes some semblance of a base, okay, and begins to balance out. Okay, it's not exactly balanced because obviously the following day, all right, you open outside of value, and this is going to happen in crypto. There's a lot of traders who trade volume profile, market profile, and in traditional markets to have a close, there is gap risk, right? There's overnight action, and you can have a time where, for example, you might close within value for the day, and then you might open up outside of value for the following day, okay, for the day that follows that. And this in crypto means if you opened up outside of value in crypto, so here's your value area, if you opened up, it just means you closed up the minute before, right? If you open up the day, that's where the close was for the following day. It's 24-hour market. All right, so there's no gap in between days. Okay, so what happened? The market opened up above value, and this is not above value on a TPO chart. Okay, This is this is not above value on a volume chart, but the market auctioned lower. Okay, basically what I was looking for was the market to make an attempt towards the low and bring everyone to sort of that oh shit zone. Okay, oh shit zone being this low, and what you're looking for is price. What you would think would happen is price breaks this significant level that it was rejected from by buyers initially. If it goes to that level again, well, anyone who got long down here has a plethora of stops down here. This is that crap zone. This is where everyone's going to kind of dump their positions in anticipation of this traveling further down. Okay, so this is a time when a lot of traders will get caught off sides, and it's almost too good to be true, right? You think, well, the market just shit right here, so now it's going to definitely be looking to do that again. Okay, all that needs to happen is it needs to break a previous area market structure. Okay, so all that needs to happen is it needs to break this significant area in microstructure rather. Okay, and then it's going to travel further down. So you get a bunch of people that are aggressively selling into the lows, and this is a prime opportunity, and it doesn't need to be a swing failure. Okay, in the sense that you break the low, but all you have to do is get enough people aggressively selling into the low for someone who's big down here to capture all of this order flow. So when you're looking at something like, for example, I shared my CVD chart. So let me get down to some of these. I shared my CVD chart, and what you're looking at is essentially the market getting very aggressive into this low. All right, so we'll draw it from low to low first. Okay, so it's a higher low, but a lower low on CVD. Okay, so just think about it as for the work that the market put in towards moving lower, there was less to show for it. So the market got more aggressive here. There was more aggressive selling here, as indicated by the cumulative volume delta. But for that increase in selling, there was less price action to the downside. So there was someone down here in the passive order willing to scoop all this up. Okay, and then what you're looking for this to occur. So you're looking for someone to get trapped off sides, or this is what I'm looking for, someone to get trapped off sides. And if you're using exo charts, for example, if you're using Sierra, if you're looking at a larger aggregation, a larger periodicity like a 4-hour chart right now, what you would see is that below the candle, for example, into the low, you had very heavy delta. Okay, so negative delta, a ton of sellers really just testing the bid. Okay, so not really testing, just kind of crapping into the bid, right? Selling on anticipation that a break below these lows means further downside. Okay, so they're looking to take advantage of a breakout and a breakdown, and what they end up doing is they're the last to sell, right? They're late to the party. Okay, and they're locked at the door, right? This is the bouncer down here. Okay, that was a really poor example, but let's just laugh at how corny and stupid I am sometimes. So market craps into the low, all right? Someone catches all this order flow because these people thought that it was that simple, right? That's all really happens, okay? The most obvious thing, in my opinion, more often than not, is what's not going to happen, okay? That's just first order thinking. You have to think, all right, there are a lot of people that think, oh my God, the market just really crapped itself right here. Maybe they're new, they're not used to this happening all the time. They don't pay attention to ATR. They don't know what levels of current daily volatility are. They don't know whether or not to expect that. All right, so they're not considering anything. They're just looking at the next low to give. Okay, and for them, it's just that's how simple it is. It's just, well, if one level loses, if we lost this level up here, well, then sure enough, when we lose this level down here, they look the same. There's the same amount of intensity off the low. It's got to be that significant. So all of this is built up into the market moving down. All right, so these are the types of opportunities that I like to get involved in, but I don't like to just get involved at the test. All right, what I want to see is that moving into the low, we get that aggression towards the low, but then we have a clear sign or a shift in participation. So what that looks like, and I wouldn't use this type of aggregation. All right, I wouldn't use the 4-hour period, or rather 4-hour interval, because you're not going to see this occur in real time the same way you would see it if you were down on, for example, I'll use a reversal chart. Okay, so I'll use a reversal chart, and I also have a 5-minute chart. So this is right here. This is my reversal chart, and then my 5-minute chart should be down here. All right, so what I want to just see is I want to see a ton of aggression into the lows, and typically what that distribution looks like. All right, so let me just go back to this. What that distribution looks like down here is if we have this towards the low, all right, you'll see that the smaller candles down here, they're kind of fat bottomed. They look like B's, right? So there's the B, the letter B, okay, because the distribution is towards the low. There's a ton of aggression. And then what you have is if you have a level like this, okay, where you have a low, for example, you come into the low very heavy, okay, establish a norm for volume up here, and then come into the low even heavier on relative volume, relative delta, then what you're looking for at these lows are those Bs, right? So some semblance of a B, some semblance of crowding distribution in the bottom, and then a shift in participation off the lows. So then you start getting Ps. Okay, and I'm trying to simplify this as much as possible. But what I'm talking about is essentially the volume in the bottom of the candle, okay, on the assumption that the low breaking is going to lead to further downside. That is all caught down here by someone in the passive order. And then the market moves out, and you see that that aggression and delta is towards the high of the candle. Okay, so if I could just find a quick example of this right now, I'll put on delta profile. All right, and you'll see that, for example, let me go on to the, how many minutes are we in? We're 15 minutes in this video. We go on to the 5-minute chart. I'll change the tick size just so we could find one right away. Okay, there we go. We'll get rid of this candle so you can see it. Okay, so you see how there's this aggression towards the highs right here. Okay, aggression towards the highs right here. All right, fatter up here, and then we'll find some of those Bs, right? Here's a B right here. It's an obvious B. Okay, so that is showing you lower end distribution. Okay, all B's down here. Oh, that is not the ink size we want. Let's see if I could do this from memory. There we go, I did it. Look at me. All right, all of these lower candles, these are not the best because these are, we'll go on to something a little larger just so I could find something that looks, you know, like the prototypical. All right, here we go. B down here. Okay. You got that shape right down here. So you could see it. The distribution is towards the low end of the candle. And this is especially important when you're looking for this downside to break. The downside break that traders are anticipating will occur. Okay, you're looking for that aggression towards the lows and then a shift in participation, right? Now, trading is about risk reward, right? So you get paid for more risk. Okay, you should rather, okay, you should be compensated for the more risk that you take, or rather, if you take more risk, you should be compensated, but that's not what happens, right? It's not that easy. Otherwise, the markets would be very simple, right? You'd just be a matter of taking the most risk and you'd be rewarded the most, okay? So you have to think that towards the lows, okay, arguably, that's the best risk reward, okay? I could define my risk based on this previous low that we kind of crapped into. I could look at something like daily ATR. All right, let's say I look at the ATR and I'm trading 30-minute chart. ATR right there, $40, 2 times ATR, $80. My stop distance would be $80 below this low. You're looking at something that's over 1%, but at least it takes in more recent volatility. Okay, now you get paid to take that early risk. You get paid to get involved early, but you don't have as much certainty because maybe the market just moves up from this point where all these people are trapped. You don't see that shift in participation. You get in early, but then the market craps down. Okay, what I would rather see, all right, is something in between, because for me, you know, I don't want to wait this long. Okay, this is a really good example of confirmation, right? But it means you waited this long, and you know, by waiting longer, you're also, I like to act on the signals that I see, right? That I have 3 to 4 things that I look for, 5 total, but 3 to 4 things that I look for, that when I see 3 that are just lining up perfectly, when I have this delta, when I have this shift in participation, when I'm into a major area of market structure, and I say market structure, but I'm talking about microstructure and this setup occurring, right? So that first order thinking out the window. I'm thinking, what is the market trying to make us think it's doing? Okay, so it's a little game theory, obviously, right? Not trying to take that too deep because then I'm just bullshitting. But we're looking at this low, significant level, okay, major delta into this low, shift in participation. For me, that means to see the aggression now coming out from the low, okay, on the other side though, those buyers getting involved. So I'll get involved down here, okay, but some other traders will wait for confirmation, a break in market structure, something like this, right? You put in this high, this is your significant level to the upside, and now we're seeing the retest of that high. So breakthrough, retest, fine. Okay, but at this point you have here to here rather than getting in early from here to here. I like getting involved down here because I'm defining my risk based on volatility, so I'm going to be defining it based on this low. All right, so based on this low with something like 2 times ATR, and again, if I'm trading the 30-minute, and basically I'm going to be looking at 30-minute using my trend reversal, my reversal charts, reversal bar, but I'm going to be incorporating this volatility, and I'm willing to get in early, okay? And I'm willing to get stopped out too. That's another thing you have to understand. I'm willing to get stopped out because I've been stopped out 2-3 times. In my last link trade, my link trade this morning, I it didn't go. I didn't get stopped out, but it didn't go for me the first 2 times that I took it. 2 times, excuse me. It didn't go for me, and I got back in again. All right. So this is the first trade we talked about. We talk about a shift in participation into the lows. All right. We're looking for the market to bring itself to a point where it looks like it's going to move lower. You see that delta, aggression into the lows, shift in participation. All right. If you want to be basic, not basic, excuse me, if you want more confirmation, use something like local microstructure. All right. So where's microstructure? You see it right away. Okay. That's your microstructure. If I took out a line chart, it'd make it even more obvious. So line chart right there. So there's your market structure. Okay, so you have a high, lower high, but now the market is above that most recent lower high. Okay, so it just adds to, the evidence in your case. Okay, this is just a matter of increasing probabilities. There's no like, this every time this happens, it's just a guaranteed in the bag trade. So that was the first setup. All right, and what this setup was essentially something that also is something that you can trade if you're trading market profile, because there was a double distribution that was basically painted. And what we're looking at is essentially, normally double distribution is 2 value areas and 1 level of single prints. And what you had in here was you had the market in a balanced area. Okay, so this is a composite. So this is multiple periods, or rather this is multiple periods. All right, so I'll undo these. Market moves from a level of balance, okay, quickly to the downside, establishes a new level of balance. And not to go over this again, but with this, you would have looked at right around 69.50, 69.60 to break, because what you're looking at essentially is we're combining both of these. All right, combining both of these, you have what has some semblance of a double distribution. So basically, it's essentially like 2 value areas, but I'm taking the value area of the more recent day. Okay, so market moves from balance, very imbalanced, down to balance again, and there's this whole gap. Okay, so what you look for is essentially the market to trade back into above the value area high. Okay, so back above the value area high, and basically you're looking for it to cover this gap. Okay, so in this case, it did cover the gap. And if we unroll this right now, you'll see that, for example, the market moved above the value area high, and you had that acceptance above value area high if you're using something like the 2 rotation, 2 TPOs to establish the control over this level. So something like an hour or 60 minutes over this level. So that is how you could have taken that setup, 2 different ways. All right, whether you're using the profiles, okay, or whether you are using just the setup at the bottom with delta, but then it brought up us into the high. And the high was more of the backside retest, and we talked about this backside retest on the video. And essentially what you're looking at is the market to come into the area that was significant low, all right, and have a consolidation and failure. Okay, now what does failure look like? Well, again, if you're looking at market structure, you have a few signs that the market was beginning to weaken. Okay, first, rejection, not something I want to get involved in unless I'm taking advantage of, just getting in and out. So placing limits at a level, you have to get a good fill in this case, because the market could move up well beyond it, and then it's going to leave you wondering if you're too early, or if you're rather too early, or you're just on the wrong side, right? So you had the market come back into this level that was your target for the first trade. Okay, trades back and forth a little bit, and you're looking for the high to either be taken out, all right, or in this case, you get the failure right away. So you get the failure of the high, and I just want to show you what you're looking at this point. You're looking at a high. I would look for this to be taken out and then to be closed underneath, okay, and we're looking at, again, a significant level, range composite value area high. This is not just arbitrary, all right. So instead, the market moves up and fails, and this is not enough for me to take the trade, okay. This is not enough for me to take the trade, okay, because in this case, you don't really have anything that's meaningful occurred, right? The market can very well move into the low and then move back up, and it's just a game of trapping sides, right? But one of the obvious telltale indications is when the market fails, and you have this failure at a very brief, and I'd say this is microstructure, but what you're looking at is essentially the market trying to make a high again at this point, but it's already failing at the halfway point between the previous consolidation, or rather between this consolidation. So what you're always doing is looking for evidence to support your case, right? So you're looking for evidence that in this case, the market is going to break down rather than take out this level again. Okay, so rather than move higher, we're looking for the market to break down. Okay, so same sort of thing that we had over here when we were sharing this trade. Okay, but ultimately what you're looking for is weakness at this level. Otherwise, you can't just take a backside trade and say that, for example, just because we consolidate at the level that it's a backside trade, right? What you need to see is that there's a consolidation and that there's a sign of a breakdown. Okay, getting in early means seeing something like this. Okay, it rather means getting in based on something like this. Okay, so what you're looking at is a high, and then again a low, but you break down instead of moving back up towards the highs. So you can either take the trade at the break of this low aggressively or get even more aggressive right here. But the idea is you're getting in on the backside. You're not just starting to short right here. You're looking for some type of failure and obviously taking in higher time frame context. Whether you're trading that yearly or weekly, it's all the same, right? You're looking at a major area in market structure and you're saying that we lost it previously, so your bias is beginning to shift anyway. So at this point, you're taking a little bit more risk by getting in earlier, but that's what you hopefully get paid for. So now we are in something that looks similar. Okay, and there's actually a few people I noticed that are posting this fractal. I posted this morning, and then I swear I saw about 50 of them. Or something that looked along the lines, and then 50 is a gross overstatement. I don't even know why I said that. So this is what I'm looking at. So high, okay, market breaks down, test up again, underside, kind of loose, right? Breaks down, breaks below the previous low, so it does bring the market to its knees, right? It looks like the market is being brought to its knees. It looks like, well, if you moved up and then violently dumped up, and this was our previous base we were anticipating, well, if you violently dumped up after that and you're retesting this has to be the very obvious retest, right? I don't think so. I think that you end up trapping as many aggressive shorts here because the market right now looks like it wants to just liquidate sides of the market. That was the word market 3 times, I think, in the last 10 seconds. Looks like it wants to just catch traders off sides, right? So in this case, what I'm looking for is I'm still looking for the market to move down, but getting in early, right, or getting in late in this case. It's actually not, it's early and late, right? So it's late if you didn't get in previously, okay, and it's early if you're getting in late. That doesn't make any sense. You get it though, right? You get what I'm saying. So what I'm looking for is a market to cover likely to this area, okay, right up here, because if we're looking at this from, what I'll use is the session from the day now. I'm looking at a high volume node right here, okay, looking at the high volume node up here. I would say, the market could come up to above 7,100, but what I'm looking for, again, I'm looking for that next consolidation to occur, okay, to take advantage of adding to that longer term short position, all right, because I've already gotten in on my swing position that I was talking about. I'm still just active as hell intraday trading, but what I'm looking to is to add to that longer term swing position because I do think that we're coming down to at least 5,800. All right, but again, just to give you an idea of what we're looking at for that fractal, right? It's loose, but to me it looks actionable. Okay, it's almost as if the market there's either so few participants or the automated trading programs are just operating under the same inputs, but you basically have the market move up towards a high, okay, flat top, break down, make an attempt towards that high again, violent breakdown below that level, and I'm looking for that grinding up behavior, and this looks like a smaller compressed version of that, right? But I could see a lot of similarities actually between this and this. Okay, this looks like it's more compressed, all right, and if anything, I think that it's going to result in the same fashion though. So I'm ultimately looking at entering in more to my longer term short position, okay, and I just say longer term, and I could close it out tomorrow for all I know, right? So if things change, but ultimately what I'm looking for is the market to move up a little bit more. It could start to consolidate up here. If we get a consolidation up here, okay, and then we break down, I'm probably going to look to take advantage of the first attempt to reclaim this consolidation. So let's say we put in some type of market structure up here, rush to high one more time, have this back and forth, and then we have something similar to what we had up here, which is essentially the market putting in one of these, all right, and then losing a previous low. Okay, I'll probably get aggressive at that point, but obviously that remains to be seen. So there's a few things that are obviously occurring right now. On the high time frame, we lost a major area market structure. On the lower time frame, we lost I'll just stick to the higher time frame. The higher time frame, we lost a major area market structure. On the lower time frame, I was going to say, we are falling below this microstructural low. Looks like catching some traders off sides there. I want to say we're going to be back above there, but it's too early to say right now. It's just we're back into this range. So I think the most important thing to note, though, is that this area and market structure on the higher time frame has been broken. Okay, so when we're looking at the weekly rather stacking up, okay, just to zoom out, this weekly, this looks like to me, rather it's not that it's broken, but it looks like it's essentially being lost. Okay, as we speak, it looks like any attempt to reclaim and regain this level has been stifled. So I think that is that. Let me just make sure there's nothing else. We will pick the winner from that video. Again, I'm looking for that consolidation up here, looking to take advantage of adding to my longer term short position, which in my opinion comes down to 5,800, but there's levels in between that you could already tell that I'm going to be observing, because I'm not going to get caught blindsided. If we start to put in if we move down right from here, let's say we move down from here, we consolidate, we break down, we test out, let's just say 63 naked point of control, this previous value area. If we see that, again, we're starting to see sellers get very aggressive down here, but there's really nothing to show for it in price action. If I see that one side is very committed in this case, the sellers, then I still will look for those short-term longs, right? It just doesn't make sense on an intraday basis to not look for short-term longs. If you start to really base out, okay, and start to move sideways, then maybe I'll consider that my 5,800 target for that position might need to be amended. Okay, if anything, I could always change my mind, right? That's the one thing that you should always remember. You could always change your mind. Don't get married to your position because you have some ego to protect. So that's that, guys. All right, let's pick the winner from that previous video. Okay, copy. Let's add that. 49 comments. Let's pick a raffle winner. All right, who's a lucky person? Okay, Mahdi Zayan. Congratulations. All right, we'll message you. I'll reach out to you, and you give us your Bitcoin address. If you're watching this right now, feel free to send it to me on Twitter or Josh, and we'll just we'll send you that $100. So I think that pretty much covers it, guys. We went over the BlockRoots program. We went over current setups, okay, what we're looking for. Talked about that double distribution setup. If you don't have a time-based chart, again, I use time and volume, right? I don't think that you should just use the TPO chart, and I've said that since the beginning. I don't think you should just use the TPO chart. I've always used TPO and volume together. So if you're looking at a session volume profile, though, it's sort of the same thing. Okay, so you're looking at, again, this previous day of balance, breakdown, another area that you're looking for this gap to close, essentially, if we regain this level in market structure. Okay, so that's that, guys. Hopefully that was informative. Everyone have a fantastic evening, morning, night, wherever you are.